Welcome, everyone. Hello, hello. We are so glad to put this together. Can everyone hear me okay? Do I need to move this up? Is that a little better? Okay. All right. So when we, is this a little better? All right.
Emily's going to fix it.
Somebody can fix it.
Not us.
I should warn you all, I was at the Hurricanes game last night, and we won in overtime, so I was yelling. So I'll try and project, but I used up a lot of it yesterday. But the good news is you're not going to hear me talk much because we have, I'm very excited about this. We have someone who has got a lot of institutional knowledge. He's got a lot of things to share, so I'm going to try and ask questions, but mostly get out of the way.
Oh, geez.
But we have Michael Collins, and he's with Verger Capital Management. And so he's going to talk with us. And really, this topic today is really focused around personal giving, lasting legacy, and how philanthropy kind of creates institutional impacts. And so we're going to share a little bit and maybe peel a little bit behind the curtain of how some of these institutions that you might give to charitably and say, okay, what do they do with the money? You know, what happens now? Where does it go, and how do they use it, and how's it invested? So do you want to introduce yourself and share a little bit about your background?
I'd be happy to.
All right.
Good afternoon, everyone. Thanks for inviting me.
Glad to have you.
As you can tell from my accent and the pace at which I speak, I'm from the Northeast, so I'm a New Englander down here in North Carolina. So it's a little bit about me on a personal level. I did come bearing gifts, so your Hurricanes did beat my Boston Bruins last night. No,
we did. So it was fantastic.
You're very welcome.
Thank you.
Always come bearing gifts. So I like to say I'm a born and raised New Englander, although I'm an Army brat. Spent first 8 years of my life traveling around, but went back to Massachusetts, where our family is from. I am blessed to be married to a modern day saint because she's put up with me for 30 years. We have 3 kids, and a 3.5-year-old grandson. So that's a little bit about the personal level. I've been in the financial services business now for 33 years, which no one can believe, I'm sure. And it's actually kind of I like to say it's same book, 2 chapters. So the first 15 years of my life, I did a lot of the same work that you do. I worked with financial advisors. I worked with individuals and families, sort of stewarding their own personal wealth. And then about 18 years ago, I transitioned to working with nonprofit organizations. I had done a lot of work with families and advisors with organizations that were important to them. So I've spent the last half of my career sort of advising and working with nonprofit organizations all across the country, of all shapes and sizes, so very locally, churches and libraries and museums, all the way up to secondary schools and colleges and universities and hospital systems and things like that. So I like to think that I've picked up some ideas and best practices along the way that I hopefully will be interesting to the group. The other half of the introduction, a little bit about Verger Capital Management. So we are what's referred to as an outsourced chief investment office. Easy way to think about it, we're an investment office for hire. So the reason that we're located in Winston-Salem is that we used to be the investment office for Wake Forest University, managing exclusively the Wake Forest endowment for the benefit of the university and the hospital system. About 12 years ago, at Wake's request, we became sort of a steward caretaker of other organizations' endowment dollars. So kind of across the U.S., across a lot of those same sort of organization types that we were talking about. So our job is to help the staff, a lot of times help the committee members, in many cases help the donors kind of sort of create an impactful, thoughtful investment plan for the dollars that have been raised over 1, 10, 20, 300 years of the institution's existence, and make sure that those dollars are spent well now, but also stick around in perpetuity, because that's the purpose of all of our clients, right? We don't have a timeline when the dollars is, it's okay to run out. These institutions are supposed to last into perpetuity. So that's a slightly different timeline, and as a result, a slightly different approach.
Yeah.
Probably too much information.
No, that was great.
All right.
That was really helpful. So, and can everyone hear a little better now? Okay, perfect. So I wanted to start off with just a couple definitions, because there's a lot of things we're going to be talking about. Now you can't. All right. Well, maybe you can. So there's different definitions. And so when you think about capital gifts, what does that even mean?
Capital gifts. So I guess it's in the category of 3 different gifts, right? So you think about, as as you think about your own maybe personal giving, there's annual gifts, there's capital gifts, and there's endowed gifts. Capital gift kind of falls in the middle. And the reason I put it in the middle is oftentimes a capital gift is a one-time gift, almost like an annual gift, but it usually has a much bigger purpose. So when I think about capital gifts, the big things like if you hit your foot against them, it would hurt, right? Like buildings and museums and dormitories and cafeterias and things like that for, let's say, on a campus. So a capital gift kind of sits in the middle of that 1 year gift and the longer term endowed gifts, usually for a very specific purpose, right? And so as a result, the giving looks a little bit different. Sometimes that you make a one-time gift, but you promise to pay it over 2, 3, 4 years to give to the organization. And I'd say the other difference is a lot of times that gift is not just straight cash. It can be other types of securities and, wealth.
Yeah. So what about an endowment? How does that differ?
So the endowment, I think the default answer is that people think, well, endowed gifts are larger than capital gifts, and that's not necessarily the same. They just have a different purpose.
Okay.
So endowed gifts are meant to last in perpetuity is the easy answer, but let's say for the duration of the intended purpose. So an endowed gift is a gift that you give to an institution that you've identified as important to you. We like to think about it at Verger. We make it very personal because I think every gift that was given to an institution was given in honor of, in gratification for a person, a place, a thing, right? It's very personal to the giver. And they want those dollars to be able to benefit that goal, that mission, that objective for as long as they possibly can. So I guess the different, so that's the goal is timeline is long-term for a very specific purpose. And the classic sort of endowed gift model was this: you donate a certain amount of money and that corpus should be untouched. And you use the earnings of that over years to then fund the program, to fund the chair, to fund the organization, so that that initial gift stays intact, which means it'll never go away. Mm-hmm. So this can go on for as long as it possibly can. And then just those earnings maybe aggregated with other people's earnings. That's how endowments get big, is you give, I give, everyone at the table gives. The next thing you know, all of these earnings are starting to work together in concert for the greater purpose, the mission, the organization. So that's changed a little bit, but the idea remains the same, is we don't want to start eating into the original gift that we give. So let's make sure we're earning a competitive rate of return and then spending prudently so we don't spend it all down in 1, 3, 5, 10 years.
So when you say kind of giving a 1 year gift versus somebody that supports an organization for a longer time period, talk to me about that, kind of that short term versus long term support, and how does that kind of tie in from an investment perspective, or how you look at things?
It's a great question. So short term support a lot of times is seen in annual fund giving. Maybe it's in not that this ever happens to you because it doesn't happen to us, but so, hey, my grandson is running this road race to raise money for this. So we're running a fundraiser for that, right? Sort of a one-time in the moment type of gift. A lot of times those annual gifts, that one-time gift is spent in that calendar year. It is truly for the purpose of keeping the lights on, right? Keeping the doors open, keeping people at work so that the organization can fulfill its mission. So there really isn't, from an investment standpoint, there's not a lot to think about there. That money is sort of coming in and going out, but it is vital, right? It is literally what keeps the organization operating. So a lot of times that money is sitting in cash just so it's readily available. We know the amount is going to be reliable. What starts to change is as you start to think about longer term timeframes, and you have the flexibility to start to think more broadly about how do we want to invest this money to take advantage of it, because we'd all like to earn as much as we possibly can with as little risk as possible. The reality is we have to meet somewhere in the middle. So that's when you start to hire someone like yourself, hire an organization might hire Verger to think about the goal. What do we really need to earn here? What does that mean then that we are sort of open to in terms of investments? What types of investments? And how do we get access to those? So it sort of changes the investable universe depending on the time frame that you're looking at.
So when you think about being a philanthropist in general, who would you define as a philanthropist? Because I think we think about the Bill Gates of the world and those that are giving billions of dollars in these large foundations. But how would you describe it?
Anyone who has ever given, I call it time, talent, and treasure to an organization that's important to you, regardless of size, regardless of number of times you've done it. let's kind of demystify philanthropy. It doesn't have to be these big grand gestures. Like I think the number this year is 67% of all donors or donations in the world come from individual investors, right? It's not these big giant, you don't have to be a Rockefeller, you don't have to be a Carnegie, you don't have to be Mackenzie Scott,
Right.
to use a current figure. It's someone who has identified missions, organizations, goals that are important to them and starts to support that in any way, shape, or form, which is really important, right? If you think about it, nonprofit organizations don't have the luxury of being run like corporations, right? And I've learned this in maybe the past 20 years. Corporations have giant balance sheets, typically have a lot of overhead. They can try things. Hey, let's try this new program, or we can try this new product. And if it doesn't go swell out of the gate, maybe it fails. It's like, all right, that's fine. It was a good effort. Nonprofits don't have that luxury. If you start a mission, if you start a program, and you don't really get proof of concept right away, a lot of times those just disappear. So that's why these, starting and identifying those organizations and those causes and just being really consistent about it, regardless of dollar amount, is so critical to them, because it gives them the opportunity to try something that they believe is really important in that community, in the nation, in the industry, or whatever it is.
Have you noticed any kind of common themes? Like if I'm sitting here thinking as someone who's potentially going to give, whether it's to a church or whether it's to an animal shelter. I know we were talking about foster dogs earlier, or really anything. Somebody says, hey, I'm running a road race and they're going to give the money to this charity. Will you support me? Are there any kind of common themes that you've noticed of certain charities or foundations, or just a mindset that a board might have, where the average investor could look at it and say, if I look at these things, it makes me feel good about giving to a charity, versus going, are they really using my dollars in the best way? I know that's a large question.
Running through it again. So maybe along the lines of, what are key markers of good nonprofits, or what?
Right. So if you're an investor,
Yep.
and or you're thinking about giving charitably, and you say, okay, what are some key things I would want to look at that would say this is a nonprofit that I think is kind of on mission?
Perfect.
Might be a better way of putting it.
I appreciate that. I'd landed the plane for me. Thanks.
Yeah, thanks. Anyone that's been in a meeting with me knows brevity is not my strong suit. We'll get there, but
that's fair. So, one of the things that we talk to clients a lot about is governance, right? So I think good governance is critical to any organization really sort of being somewhere that you want to donate to and it's going to do good work. So,
what does that mean?
Great question. So, meaning, I think the easiest way to think about it is, what percentage of every dollar that I give you is actually going to go to work to support the cause?
Right.
Right. How much overhead is there? And there are organizations like GuideStar and many where you can actually look it up. They'll give them a grade. Unfortunately, some of the largest nonprofits in the world, it's like 65 cents on the dollar is going to support the cause, or less. So it's not a lot. You start to get up to 70, 80, 90% of every dollar because they have volunteer boards and they have really efficient processes, and there's not a lot of sort of waste in what they do. That's where, at least me personally, that's where I start to feel good. You're always going to have costs of running an organization, but the thinner that margin can be, the more of your hard-earned dollar is going to work for what you wanted it to.
So when these funds kind of go into a endowment, kind of walk me through what happens next. So you found one where you look at,
Yes.
Okay, they've got healthy margins. I like what they're doing. I make this donation. Then what?
Well, I think there's even a step before that, right? Even before making the donation.
Okay.
And that is sort of, how much do you know about the organization, right? And so what do you know about their decision-making structure? How, what kind of decisions have they made in the past? A lot of this information is available. So if you're thinking about very specifically about the donation you're about to make, it is not unfair for you to ask whoever it is you're working with, whether it's someone in an advancement office or a fundraiser, or even someone at a committee level, to ask them for things like their investment process, their philosophy. How do you do this? If I give you this money, what are you then going to do with it? And do you have a very well articulated process, philosophy that you are going to follow, come thick or thin? Because I need to know that you have, if I just give it to you and you kind of use it willy-nilly, I don't love that idea.
Right.
But if you say, this is how we do it. So this is what we coach our institutional clients to do, is have an investment policy statement. This is how we do this. This is the purpose of the dollars. This is what we're going to do with the dollar you give us. This is how we're going to invest it. This is how we're going to spend it. This is what we're not going to do. That's an important one too, right? So we won't support these things, or we won't invest in these particular asset classes, investment vehicles, whatever it is. And then what is the process that you have for reviewing that? Because that should be sort of a living, breathing document. It shouldn't just be, it was written 25 years ago and
things have changed.
And things have changed. And none of those committee members who drafted the original policy are even here anymore, because by the nature of the beast is most of committee members are volunteers, right? They're there because they love that particular organization, and they're naturally going to turn over time. But you have to have a roadmap. So that's the first place I'd start, is show me your roadmap. What are you going to do with this? I think a really good nonprofit will have all kinds of examples of how what one gift has done to, I won't say change their mission, but what does one gift actually do? What were we able to do with it? $25 doesn't seem like a lot of money. You can probably feed a family of 5 here in North Carolina for a week with $25. If you think about, if everyone's getting $25, economies of scale, the way these organizations work, the partnerships that they have, you can have a big impact. So ask for examples, I'd say.
Yeah. So then once you say, okay, this is an organization I like, this is one that I want to support. You cut that check, you give them that donation. Then what happens?
So you mean back to the question you asked me a minute ago before I went sideways? Yeah. So what happens then? What happens at that point?
I'll get
is, if a lot of people think about an endowment, if you're familiar with the term endowment, right? Where you think about your alma mater, or you think about your church or whatever other organization is. It's not just one. It's one investment pool, but it's an accumulation of a bunch of gifts, right, over all these years. So my gift goes together with your gift. All of that kind of works together. Once that investment pool is created, then you start to think about, how are we going to invest this money? So that's where the investment committee works in tandem with an investment office, if they have it, or a hired advisor if they don't, to set this long-term plan for that particular investment pool. And you kind of reverse engineer it, right? So they figure out, how much do we need to earn?
Okay.
Well, the easiest way for us to think about that is, well, how much are you going to spend?
Right.
So, because we want to keep this what we call purchasing power parity, or intergenerational wealth, right? You want the money to keep up with inflation. So how much are we going to spend? Then what do we expect inflation to be? And what's it going to cost to run it? That's really kind of our target. So once I have a target in mind, like each one of you probably have a target for your own wealth. Once I have a target in mind and I don't have an end time, I start to think thoughtfully about, okay, well, then what can I put in this portfolio to do 2 things? Number one, hit that goal. But at the same time is to get there in the most consistent path possible, right? There are a bunch of ways to earn 8%, right? I kind of like the one that goes like this.
Yep.
Some people love the roller coaster. It's not for me anymore, right? So, and when you're thinking about an organization that has to spend money, that's why you gave the donation. When you're crystallizing, I guess, a loss, it's a spend, right? Every single year, you have to be really thoughtful about what's the most consistent way to get there, because that puts the organization in the best place. So that's how they're going to arrive at, this is how we're going to invest the dollars. And then that advisor or that investment office is going to go start to put that money to work for you. The one thing I will say is that's sort of the same idea, but tangential, is there could be different types of investment pools within an endowment, right? Right. So you've got one investment pool that's doing this. You've got another one that's doing that. That's for any number of reasons. It could be because the program it supports is different. It could be because the donor's will is different, right? So, or the donors, I mean, this is your money, you're giving it away, but you do have some latitude depending on the organization to feel about, like, how do I want this money invested? Some will have more conservative approaches. Some will have more aggressive approaches, right? So each one will have sort of flavors of what that endowment portfolio looks like.
And you just touched on something that I wanted to circle back to, something you said earlier, and I kind of picked up on that same theme here, in the sense that everyone is making a gift for their own reasons, and there is an intentionality behind it.
Sure.
But what would you say to someone who is trying to say, taking those first steps towards being more intentional with that philanthropic giving?
Yeah, it's I think what I've seen the smartest folks do around their philanthropy is decide, what is truly important to you, right? So get that personal connection. So being intentional means getting personal. It doesn't mean you have to stop supporting other organizations, but at some point, everyone's got a certain number of charitable dollars that they're going to allocate. So I think the first decision is to decide, what do I want my impact to look like? Some people feel better about being able to distribute it across as many organizations as they can possibly help.
Yeah.
There's also nothing wrong with saying, I'd like to have a much bigger impact, maybe to a smaller number. Now, what we're seeing now is that trend towards the latter. So if you look at just philanthropic giving broadly across the U.S., the number continues to rise, which is good. It was a short blip in 2020, but the overall number continues to rise. But the way in which people are giving is starting to change a little bit. And we're seeing people give the same or maybe more money than the average, what the average charitable gift is in the United States.
I don't.
It's not as, some people think, wow, if I'm going to be a philanthropist, I got to give away a lot of money.
Right.
It's between $1,000 and $3,000.
Okay.
Total giving for a year. So it's very real. Like it's a real number, not like Bill Gates number, right?
Yeah.
But what they're doing is we're seeing a trend towards same amount of money, for maybe a little bit more, but to fewer organizations, so that they have a greater impact on that one particular organization because they've made it intentional. They've made it personal. A lot of times that means you need to include other voices in the room, right? So start to think about what that looks like, not only for your insular family, but who else would you like to be involved in this decision making? Seeing more and more folks get second and third generations involved in this decision making because they want to instill that idea. They want this to be part of kind of the fabric of their family. Is we're going to do this, and it's okay to ask input from folks even if you made money.
Well, and I know I have some clients who they get their kids involved in the charitable giving. They'll say, "Hey, we've allocated this many dollars, but we want to hear from each of you. Where would you like it to go?" And that's one way of doing it. You could talk to your grandkids and say, and we do this on the investing side too. Talk to your grandkids and say, what do you really like? What are you excited about? Well, I love Legos. Well, let's talk about what company makes Legos and can you invest in that? And same thing from a charitable side. Well, do you really like pets? Well, what's a charity that helps with dogs? But would you say there's any kind of strategies you could share that somebody might say, well, I'd love to talk to my family about this. What's a good way to kind of initiate that conversation or start off?
This is a good one. You probably have better ideas for me than I'll share your personal one, just because I couldn't think of a good way to do it in our own family.
Sure.
So it seemed easy for me. So a few years ago, our family started a donor advised fund. You might be familiar with you're familiar with the vehicle.
Yep.
And we had made the decision at that point when our kids are now 24, 22, and 20. So it's just a while ago. But we wanted them to be involved. So we picked the easiest day we could think of to start to have that conversation, Thanksgiving Day. So part of Thanksgiving Day became, we had to give them a heads up because they knew what the assignment was due on Thanksgiving Day.
Okay.
But we told them, this is what we're going to do. We want you to identify, you're going to get a chance to tell us where we're going to send some of the money for this year. But you got to do the homework. You got to go do some research. AI didn't exist then, so it's a lot better. But they had to find out what was important to them. And then they had to come and sort of deliver the presentation to us at Thanksgiving dinner. And of course we were going to say yes, we just wanted them to do the work. So that was the easiest way for us to start, was just around what was a very logical day for us. But you probably have better ideas around how you've seen other families do it, but I find one that makes sense for you personally and kind of move forward, that there's no wrong step in sort of starting that conversation.
Yeah.
I think the important thing is that you start it.
Yeah. Well, and I've found that, and this, I think we probably all find this with everything in life. When you're looking for something negative, you're going to find it. When you're looking for good news, you're going to find it. When you have a mindset towards, let me be looking for charities and places that I can have an impact, you're going to see it. And I think it's really good to instill that in your kids and grandkids and friends and family. There's plenty of negative things going on in this world, but there's also a lot of good. And there's a lot of people having an impact. And that can extend beyond just the financial gifts as well, to the time spent and things of that nature as well.
The old quote that's attributed to Mr. Rogers is like, always look, like in times of crisis, like always look for the helpers.
Oh,
right?
yeah.
Right. So it's like, you can be one yourself, you can identify those organizations, but to me, it's a sort of very real way to think about that.
Yeah. Well, this might be a little bit of an off the rails question, but one of the things that is probably different for someone investing for retirement is the timeline versus an endowment where you say, okay, I don't think Chapel Hill's going anywhere. I have a feeling they're going to be around 50 years and 150 years. And so that timeline is a little bit different.
Mm-hmm.
But when you think about someone who says, okay, we're wanting to create that generational wealth and kind of think about that second generation, that third generation, there's some assets that you have to have more liquidity. It's like, we need this because we're using it for living for next month. This is where our funds are coming from. There's some assets that you have a longer timeline on.
Sure.
And I would say you see the same thing on this side. There's some assets that need to be used on the weekly, the monthly, the annual.
Yeah.
But you can also go into investments that maybe have a 15-year maturity or a 30-year maturity. So how do you kind of differentiate between that, and what do you identify as this is something I like versus not?
So we think that that's a bit of a luxury for us in our investment process. Right. The reason that you would look at something like that, I think for obvious reasons, is that you believe that it has over that you're willing to sort of give up control, liquidity for a certain amount of time, because you say, well, if you're going to pay me a lot more than I could get somewhere else, then sure, I'll do that.
So you see that with private equity. You say, hey, I may not get this back for 15 years,
right,
but I'm getting that consistent 8 to 12%, right?
Potentially, yeah. And maybe bigger than that, depending on what they're doing, right? So these ideas of, so a lot of these investments are thought of as alternative investments. Right. So you've got your traditional stocks and bonds and cash. I think that's everyone real familiar with those. Anything beyond that is really kind of defined as an alternative investment. So you mentioned sort of private capital broadly, but private equity and venture capital, where we're hiring managers. We don't do that ourselves, but there are very specific managers whose areas of expertise is finding these private companies, investing in them, making them better. And then these companies are wildly more profitable. They, of course, get a portion of it. So, but it takes time, right? Yeah. A process like that takes time. So that's why you say, here's the investment. You're not going to see a penny for 7 or 8 years, but the idea is beyond that, you will be well rewarded for it.
Right.
When you have an unending timeline like we do, any institution does really, you have the ability to put more and more of that in there of potentially higher returning investments. So we love the fact that we're not handcuffed in any way by timeframes. Mm-hmm. So that can be everything from these private companies that we talked about to real estate and energy and natural resources. And some of these, we call them real assets. Like I made the joke before, but what's a real asset? Well, if you stub your toe on it, it would hurt. It's like buildings and oil wells and natural resources, things like that. So that gives us the opportunity to potentially, we believe the reason that we invest that way is that it's going to over time give us higher returns. Those higher returns can go right back into funding the mission of the organization.
Yeah. Are there any charities that y'all are working with where you said, oh, if I wasn't in this job, I never would have known about them, but they're doing really cool things, and that's kind of amazing. Are there any that kind of stand out?
Caught me off guard on that.
I'm sorry. I could ask you more about private equity. There's tons of questions about that. No one wants to hear about that. And also,
I will say there's actually one here in North Carolina that we got introduced to. We didn't ultimately wind up working with them because we weren't a good fit. I think we're really concerned. We had 12 clients at Verger. It's not a lot. We're intentionally that size. Right? We try to align ourselves with organizations that we think really understand the way we want to invest, and where we really understand their mission, and the process sort of is a good combination, right?
Right.
But there is an organization here that I will mention in North Carolina that is doing amazing global work, kind of associated with the National Institute of Health. So solving really critical, intense sort of global health crises around the world. All started here in Raleigh, up street in Raleigh. It grew from one grant and one doctor who's actually still leading it 25 years later to being now it's actually a operating foundation instead of just being an investment. It was an investment pool for a long, long time, and it would fund these organizations. Well, the need has gotten so much and the grants have gotten so great that they're actually now, we can actually become a sort of a functional foundation, actually do the work, not just fund the work, but do the work. There's a couple different ways to be in this foundation world. And that was one that I didn't even know existed. And then when you look at the crises that they've solved around the world, or I shouldn't say solved, helped to address around the world. Yeah. I knew that those were a problem, but I didn't know who helped solve them.
Yeah. Well, I think that's really cool. I have a friend who started a 5K, and he did it in his mom's honor. She passed away from cancer. And so he started a 5K race. And the first year, there was like 50 people that showed up. And he was like, I don't know if I'm going to do this again. But everybody said, you should do it again. It should grow. Well, the next year, there was like 200 people that ran it. And he's done it 4 years now. And last year, they had almost 500 runners. And they raised, to date, they've raised over $200,000. And they're on pace. He said, we've already raised close to 50,000 for this year's race. And it keeps growing. And I think that's an example of something where he had this idea, and his goal, I talked to him about it. He said he wanted to raise $20,000 for charity, for cancer research and for like breast cancer treatment and early screenings and things like that, kind of in his mom's honor. And he's already done more than 10 times that. Yeah. And so I said, how many years are you going to do this race? And he was like, as long as people keep signing up and helping. And that was the big thing, is he said from the get-go, if he had done it on his own, he was like 50 people. He was like, I could barely manage it. But everyone that ran said, this is a great thing. How can I help? And next year, he said, we had almost as many volunteers, as we did people running, and it just keeps growing. And it's from everyone taking the small actions. And I think that's the key thing. And it's the same thing with this one doctor started something, more people kind of pile in. Not everyone in the room has to go out and start their own charity. It's not like you have to go do something from scratch, but I think everyone can have a huge impact.
Well, it kind of comes full circle back to the question at the beginning, right? About what is philanthropy. So I think that started with 50. There's so many people that made that sort of engine run afterwards, right? Maybe they couldn't run the race. Maybe they thought they were terrible at fundraising, but they said, oh, I can check people in. Yep. Right? I can be involved in this way. I'm happy to make sure all the t-shirts get done. I'm sure I have to take care of safety and all that. Like so many moving parts to those things. Right?
Or even just passing out water here at mile 2.
And but that energy and that excitement, I think, is as big a part of philanthropy as the dollars themselves, right? So it's wonderful to see that more and more what I'm hearing from charitably oriented folks is that they enjoy watching the impact of their philanthropy as much as they like giving away the check. In some ways, it's more, right? When you can see in your lifetime instead of waiting for the bequests and all that kind of thing, which are clearly important as well, but that joy that you receive in watching what your gift has done or watching what you've created kind of blossom is really great.
Yeah. I heard a great quote from John Maxwell. He said, do your giving while you're living so you're knowing where it's going.
Fair.
Grammatically, not great, but I thought it was a great quote. And I think we would all agree it's like the joy you get at Christmas is when you're watching other people open what you gave them. It's not necessarily what you get. Although that part's fun too, but it's all about that giving and the giving back. Well, I wanted to thank you for your time,
my pleasure.
Doing this. Do we have a few minutes where we can take some questions from the room?
Let's do it.
And then while y'all are thinking, Kristen's going to come around with a microphone. So if you have questions, just raise your hand. He'll be glad to address them. I might answer them too, but I'll leave it to you. But I have 2 final questions for you.
Okay.
One of them would be if someone was here and enjoyed some good food, listened to his chat, and came away with one mindset shift or one slight change of how they perceive charitable giving or philanthropy, what would you hope that they take away?
Charitable giving can be for everyone. It shouldn't be measured by anything other than your intent. So it shouldn't be measured by time frame, scale, number of organizations. It should be measured by what do you want to sort of help and support. So it's really personal more than anything else. It should be very personal to you and not for any other person's reason. That's the one. And like I said, anybody can do it.
Yeah.
So that's it. That's my number one takeaway. Don't let it feel like it's too big or it's not for you. If it's on your heart, then I say go for it.
That's awesome. Yeah. That's awesome. And then this is more for me than anyone else, but what's a book that you would recommend that you've read recently or that you would say this is kind of top of my shelf?
Coming. All right. So I'm not a prolific reader. Like my wife's a middle school English teacher, so she's a prolific reader, as is my mother. I think they've actually read every book in print.
Okay.
The 2 of them combined. But I do. So this is what I do when I read. So I read a lot for work. But my pleasure reading is always 2 books at the same time, which maybe was what slows me down. So one's for work and one's for fun.
Okay.
So what I just finished while we were away on vacation a couple weeks ago was a book called An Unfinished Love Story.
Okay.
Doris Kearns Goodwin and her husband, Dick Goodwin, wrote it together. I learned that this was about his work. So it was basically they raided his archives of everything that he had saved. He worked in the John F. Kennedy, Lyndon Baines Johnson, R.F. Kennedy administrations. And he was an attorney by trade. He had taken copious notes and had some of the most amazing things that were literally just sitting in boxes in his office for decades in Brookline, Mass, where they lived. They took it all out, unpacked it all, and basically she and he together wrote this entire book, sort of first person about his experiences with all of them. Really fascinating. I'm kind of a history nerd, so I really liked it. And then the work one that I just finished, I actually got at a conference I was at a couple months ago. It's called Dollars and Cents. It's by a gentleman by the name of Dan Ariely. He's a behavioral economist, behavioral finance, which I'm fascinated by. This idea of, actually, if I can go back and redo my career, behavioral finance didn't exist then, but the idea of just studying how people make decisions and why they do it and then applying it to behavior. It's like, why are we sometimes our own worst enemy? So Dollars and Cents is sometimes like how we misthink about money. It's just interesting. I read it thinking about my children who were in their early 20s, like starting to rethink of that. What are they going to do? Like getting those first steps right so I don't screw them up in any way, shape, or form. Right. So get them pointed down the right path. It's like, I'm going to read this, see what Dan says. And it was really interesting. It's a pretty easy read. It's not a very long book. So those are the two right now.
Excellent.
Ariely. A lot of behavioral economists. Danny Kahneman's, but I'll give you a bunch of names later.
Yeah. And if anybody wants, we'll put together kind of list of some of the different, because he'd mentioned this just kind of, it may have gone by, but he mentioned there's resources where you can go in and look up different charities. And so we'll put together a list of that as well as the book recommendations and have that for y'all as well. But does anyone have any kind of questions? All right, fire away.
My money will come when I die.
Oh, she's got a mic for you, so that way you can.
I don't need one.
but someone else might need you to need one.
Excuse me.
It's from teaching all those classes. It says from teaching all those classes.
Well, it is. Teaching 100 or 150 people at a time. My money is going to be left to where I worked.
Yep.
But it's going to be when I die.
Yep.
Because I don't have a lot of money monthly. But are there some questions or some things I should clarify with the person at work before doing that? Their name is a beneficiary.
Yeah.
But what should I make sure is questioned or asked?
So there are many. So the first thing I think about is I kind of back up and I think what I'd want to know is what does giving look like for them? So I would want to understand, do they have, is charitable giving and receiving charitable gifts such an important part of their day to day that they have a team or a person even that's dedicated to that? Or do they have a fundraiser? Do they have an advancement officer? If you know that they do, okay. So you know the answer to that question. So this is clearly something that's important to the organization. They've got a structure around it, right? I would also understand want to understand, are there different ways in which for me to give? And I don't mean now versus later or this versus that, but are there sort of different areas of interest, maybe is a way to put it? Can I support one thing over another? Are there ways for me to sort of direct it a little bit more that feels even more personal to you? Or, and there's no really wrong answer to this. When the money arrives, is it going to go into the general endowment pool, sort of unconstrained funds that they then use? So I'd want to understand those. And then the last part would be, do they have a process? And we talked about this a little bit before, right? Help me understand the process that you then use to sort of steward these dollars and be a good custodian of them and spend them in support of this organization that I work for so long. So if I know those in the back of my mind and I feel comfortable with the answers there, then I feel like you've identified a really good process in the right place. Right. So, and if I bet they'll probably also have stories though for you to understand, like to really understand the impact instead of just giving the dollars. Like, what does this really mean? We talk. What could this potentially mean for the organization over time? Because they're not going to spend it down, right? They're going to hopefully do what we said. It's an endowment. They're going to take a little part every year, going to aggregate those all together and serve the purpose of the group. Great question.
I listened to a talk given at a symposium not too long ago, and the person was addressing giving, and he presented some convincing statistics that people that give are more successful and happier. Now, that's not the recipe
Yep.
for success and happiness, but it's got to be an important ingredient in the recipe. Wonder if you'd comment on that, and do you actually see that in people? Or
So I would agree 100% with both of those comments, right? So I think it feels good to a person to give away what they've earned, right? So people who are philanthropic in general, I think there's, and I'm not a scientist, but there's very real things that go on in your heart and your mind when you're watching the hard work that you've put in benefit other people. That's got to be good for your lifespan. I don't care what anyone says with no medical background. I agree with that 100%. And I think that also goes hand in hand with being happier, like the Christmas Day story, right? So I believe wholeheartedly that both of those statements are true. And I've seen it firsthand. I've seen it. We do get to do quite a bit of work with, when asked, with donors of potential donors of our clients, because the advancement office says, well, we can't really tell the story as well as you can. So can you tell the story about what you're going to do with it? And to watch people smile and light up when they think about, I think what makes people smile the most is the overall impact that they can have, right? It's what can this fill in the blank number truly be over the next 20, 50, infinity years, right? And that's where people's smiles really come in, because they realize, wow, we've just kind of 10x'd everything I thought I could do. We show people that there's a very real time in the life of your gift. We call it the life of a gift. There's a very real time that typically is somewhere around, let's call it 10 years out, where you have given away as much money as you gave, and the original gift is still there. Right. So now at that point, everything's great. Right. So it just feels truly wonderful to see the impact. And I think the scale thing is what makes people smile the most.
I'll also say this. I read an article recently, and they were doing a study on type 2 diabetics, and they gave them 2 milkshakes. They said, this one is a low sugar milkshake. This one is a high sugar milkshake. And obviously everyone's, sugar count, they tested them. It spiked when they had the high sugar milkshake. Then they showed them they were actually the same milkshake. It's amazing. And what they were looking at is how much physiologically is impacted by psychology, by like where the head goes, the body follows. There's a lot of truth to that. So if you're sitting here thinking, oh, if I eat this, my blood sugar is going to spike, you're probably right. It's amazing how that works. And I think you find the same thing with charitable giving. It's like when I don't want to sit here and preach prosperity gospel. I'm not going to jump in front of you and do that. Also, as a lot of you know, my dad was a pastor and a missionary. I'm not, but I will just say this. I believe these 2 things very strongly. 1, I believe when you're a good steward of what you've been blessed with, good things happen. And 2, I don't believe you can outgive God. And so I think we want to be a good steward of what we've been blessed with. And that's part of why I wanted to have this conversation, was to share and say, here's some questions I need to be asking when I'm thinking about either what I'm giving this year, when I think about those RMDs and what do I want to do with QCDs, or when you think about Christmas time and we want to make these gifts, or even in estate planning and leaving a legacy, but thinking about the impact that you have, it's amazing what positive things can come of it. And it feels good to give.
Yes.
It really does. But sorry, you had a question.
Yeah. You mentioned FIT a couple of times, and I'm just curious if you could give a couple of examples of in an organization that you would work for that is a good, what are a couple of examples of what is a good fit and what is not a good fit?
Sure. And I'm going to go back to the part of the conversation we were talking about. So let me explain it one way. And if this isn't the way you were thinking, then maybe I'll rethink the answer. But anytime you're entering into a relationship with someone you're hiring for advice, right? There are different ways that when I think about fit, right? Do we like each other? Can we work together? Does the way you, in this case, manage money or do your job align with how I think about wanting my money to be managed, and will achieve the goal kind of over the long term? Or are we going to get to the same place at the same time? So when we think about fit, what that often means is the decision-making tree. When an organization hires Verger Capital Management, the committee is, because in the name, outsourcing, they are sort of ceding decision-making capabilities to us. They want us to do everything for the organization because the committee looks at it and says, we've got much bigger tasks to worry about. Like we have to keep this organization running. We have to identify grant recipients. We have a bunch of work that we need to do in the day-to-day operation. We don't need to be spending 1 hour of our 8 hours a year trying to decide how to manage the portfolio, right? So the first thing is, how do we like to make decisions? That's a fit question for us. The second is, what do you as an organization feel comfortable with having inside of your portfolio? So we talked about private equity, venture capital. We talked about these alternatives. We are a strong believer in their use because we have the network and the expertise and the experience of implementing them in portfolios. We believe that we know the right way to do it. There are many organizations who are not comfortable with those asset classes being in their portfolios at all. I've seen many of them, and you'd think it's just the smaller ones, but it's not. It's just a philosophical belief that we don't really understand them, we don't really want them, or we've heard bad press about particular things, and we don't want them in the portfolio. Totally fine. It's not how we do things. And so what we'll do is we'll help them find a partner who may align better with that sort of investment philosophy that's going on. So decision-making, investment philosophy, and then I think the last part is the team, right? So we're a small organization. We have 17 employees at Verger. We love it that way. Everyone knows our entire team. We know the committee members and all, for all the organizations that we work with. So there is that sort of interpersonal, do I like the way you explain things? Do I enjoy our meetings? Right? Do you seem like a good person? So those are the 3 levels that I think about fit for us thinking about working with a nonprofit organization. Is that the path you were going down, or did I? Okay, all right. You have anything else? I mean, you've got to think about fit too, right?
We do. So I'm sure some people have heard me say this, but a lot of you probably don't know. But when folks come into our office, obviously you're interviewing us as a financial advisory firm, saying, is this somebody who we feel comfortable with, and we like your investment approach and the way you would be investing our funds, and do you have the right ideas and the tax strategies? Because I would argue if you're not talking taxes, you're missing a huge piece of your investments. What some of you may not know is at the same time, we're interviewing you, and we call it the dinner table test. And the reason for that is because, one, we like to do these types of things. And so if I'm sitting there, I'm going to pick on Ron because he's in front. If I'm sitting there meeting with Ron and the whole time I'm like, okay, yeah, you got a lot of money, but I would hate to eat dinner with you and your wife. Like if my wife and I had to go out to dinner with you, I was like, that would be awful. We're not bringing you on board as a client, because we're probably going to eat dinner together at some point. And if not us, I'm going to put you at a table with somebody else who's a client. And so it's kind of a silly thing, but it's like, I don't make a decision based off of an asset amount. I make a decision based off of these people that I like to work with. It's like, are we aligned philosophically? I had someone tell me once, it was really weird. He looks at me and he goes, I don't go to church and I don't believe in God and I don't like any of it, but I like that you do. And I went, okay, that's different. And I've had people that have said, I don't like that you talk about your faith at all. That really bothers me. And I go, well, then we're probably not going to be a good fit, because I'm not going to apologize for my faith. It's like, I think too many people have not taken a stand with their faith, but that's a whole separate thing I won't get into. But I will just say this. I think it's like, if you're somebody that gets offended by working with a bunch of Christians, we're probably not going to be a good fit. And that's okay. Right. And so I think some of it is, on the investment side, you have to be aligned on the investment side. But I think it also helps to be aligned with your approach to life and the way you look at things, because I'll be honest, you might say, well, why'd you put this together talking about philanthropy? Because I do believe it's like we're all here to try and do the best we can. We want to be a good steward of what we've been blessed with. We want to make that positive impact. And I believe part of that is being the hands and feet of Jesus. And so, if you do want to talk about faith, we can talk about that privately. I'd be glad to, but I won't preach an Easter sermon. That's already happened. But I want to say thank you so much for joining us here. And then, do you mind sticking around for a few minutes if somebody has a question? Okay, great.
But thanks for having me.
Awesome. Thank you.
I
Thank
love
you so much.
Love that you put this on for the folks that will join us. Really good stuff.
And I will just say, just kind of the housekeeping side of things, remember there's a form in there. If you they put this down and told me to say, if you don't mind filling it out, just so we have a record of here's today. If you have further questions, we'd be glad to talk to you about it. If you want to sit down with your advisor and say, hey, I want to go in a little bit more in depth, or even kind of have more of an estate planning or a legacy planning conversation, we'd be glad to have that with you as well. But thank you again so much, Michael, and the whole team at Verger, letting you get away and do this with it.
And one last
We
thing.
enjoyed it.
Are there more cookies in the back now?
Are there? Okay,
More
yes.
cookies have been
That is-
delivered.
That is important.
Last
That is important.
housekeeping issue. Thank you.
All right. Thank you so much.
Good stuff.
All right. Y'all take care.